Good evening to all of you. How are you all? So first let me know, audio, video both are okay? Are we good to go? Good evening to all of you. No video बोल रहा है. Do rejoin the session once. Do rejoin the session once. Everything is okay from my side. Now okay. So let's start. We have discussed in the last class about the certain factors which influence the Indian economy's nature and Indian economy's characteristics. Okay. So this is what we have discussed in the last class. Like these are the factors which actually influence the nature and characteristics of Indian economy. Okay. Now first let me know what actually the disguised unemployment means. If we talk about this, what does this means? Let me know. What is the meaning of this? Those who are facing any video issue or any audio issue, do rejoin the session once because everything is okay from my side. Okay, so let me know what actually this means. When we have what? When we have a surplus manpower, so that surplus manpower, very good, it comes under the disguised unemployment. It means their productivity in the business is zero. So it doesn't matter they stay in the company or not, because of not having them or having them does not create any kind of difference in the productivity of a company. Okay, so these type of unemployment is discussed unemployment, right? Correct. Now, if I talk about the per capita income, what actually the per capita income is? Let me know what actually the per capita income means. And as per the per capita income, what is India's category according to World Bank? What is India's category according to World Bank as per capita income categorization? I am asking for category. Now we have studied there are 4 categories: the lower income, lower middle income, higher middle income, or higher income. That's what we have discussed. Very good. Lower middle income is the category of India, and the per capita income means per person income in a country. That's a per capita income. Okay, so this is we have discussed. This is the number we have discussed. Now we have to start from here. So if I want to say that India is an agriculture economy, or if I want to say that India is agrarian economy or India is an agriculture based economy, what 2 conditions have to be fulfilled to be called as a India agriculture economy to be India? Let me know. If I want that India will be known as agriculture based economy, or I can say the agrarian economy, in that situation what 2 conditions have to be fulfilled? Very good. The national income should come from this particular sector at least 50%, and the employment generation should be generated around 50% from the same sector. Then only you can call that India is an agriculture based economy, or you can call India as a service based economy, or you can call that India is an industry based economy. So to be known as a particular sector economy, what you need to fulfill 2 conditions, and these are the 2 conditions we have discussed. Okay, so what this paragraph is saying, India was an agriculture economy. It used to be, because around, you can see, if we talk about the agriculture, it used to contribute more than 50% in the income as well as in the employment generation also. That's why India used to be known as agriculture economy, but with a very low per capita income. So after independence, agriculture shares of GDP fell during the development process while industry and services increased. So what happened at the time of before independence or after independence, agriculture used to have a major contribution in the Indian economy. But if we talk about, we have started the planning commission's 5-year plan. We started focusing on the other sector also. So the agriculture's contribution in the Indian economy is started falling, and the other sector, that is industry and service sector, started increasing. So 1950 agriculture was a dominant sector, that was around 53.1% of GDP used to come from the agriculture. Industry used to contribute 16%, services used to contribute 30%. Then after what happened? Following independence and the start of the planning process, agriculture share decreased while industry and service shares increased. So you can see service sector increased to 38%, agriculture reduced to 36%, and industry increased to 25%. So this is how the service sector started increasing the contribution in the Indian economy, and the agriculture started falling the contribution. Now, Indian economy in British period. So, Indian economy during the British period, India's commerce, trade, investment were hampered by the unilateral transfer of capital and raw material to Britain. Unilateral means one-sided. Unilateral means one-sided transfer. So this is what we are talking about. Unilateral transfer used to happen of your raw material, of your capital from India to Britain. That's why they have developed a certain infrastructure in the country also. So this is what we are talking about. At the time of Britisher, this used to happen. Under the British rule, India remained a low quality labor market. They used to exploit the raw material. They used to exploit our labors. This used to happen. Now, according to statistics, less than 1/6 of Indians were only literate at that time. Okay, 1/6 of Indians were only literate at that time. And then in 1867-68, Dadabhai Naoroji published his first estimates about the national income of our country. Okay, and under his book, the book named as a Poverty and Un-British Rules in India. The book named as what? Poverty and Un-British Rules in India. Now, under this particular book, he defined the drain wealth theory. He defined what? He defined the drain. One second. He defined the drain wealth theory, and he has estimated the national income for the first time in the year 1867-68. Okay. Now, what is drain wealth? First of all, let's understand brain drain. Now, what is the brain drain concept means? It's very obvious at that time. In the future, if you talk about brain drain, is simply a kind of situation in which Indian citizens thinks about like there is nothing for us in India and we have to go abroad and we have to get our kind of job or our skilled job in the foreign country only. Let's say, for example, I completed my graduation, I did my PG, and after doing that I feel like that I have a high standards of skills. That's for that purpose or for that level, I won't be able to get job in India. So, for the better livelihood, for the better living standard, I should move to the foreign country. This is the brain drain. Like people have their brain washed that nothing is there for them in the country and they are going abroad. This is brain drain. The same concept is there, drain wealth. Your wealth from the country used to be drained by the Britishers to the Britain. So they used to take the wealth of Indian economy to their Britain, and this is how their per capita income increased 55% between the duration 1680 to 1947. And what about India? India only got the increase of 12% in its per capita income during the same time period. So what they have done, they used to drain the wealth from our country, and Dadabhai Naoroji has defined this theory in his book, that is Poverty and Un-British Rules in India. And he was the first person who has given us the estimates about national income. So he is not only famous because he has given the first time national income estimate, he was famous because he was the first Indian who became the elected member of British Parliament. That's why he is more famous. This was the first Indian who became the elected member of British Parliament, and from there he got to know what these data are and how important they are, and then he introduced the national income estimates in the country for the first time in the year 1867-68. Clear? Next. According to Dadabhai Naoroji, so British India's national income was 340 crores, And the per capita income first time was 20 rupees per annum. So you can see our national income was 340 crores, but what per person was getting? The per person was getting only 20 rupees per annum. That was the per capita income of our country in the year 1867-68. This is the data that has been calculated or estimated by Dadabhai Naoroji. After that, in 1948-49, we got that our per capita income is 142 rupees per annum at the time of independence. So you can see from 22 we only reached to 142 rupees per annum. It means only 12% increment has been seen in the per capita income of the country from 1680. But if we talk about Britishers, they have increased more than half of their per capita income. So other economists also given the definition. They also estimated the numbers for the national income, per capita income. But you do not have to remember the everyone's name. This is what is important for you. The Dadabhai Naoroji estimates. Apart from him, William Digby, Findlay, V.K.R.V. Rao, he provided the first scientific method. He provided this first scientific method to measure the national income, but his method failed. His method what? His method failed. So that's why this scientific method was not that much famous that Dadabhai Naoroji's estimates is. So they all produced the estimates about the India's national income and findings were almost identical. So these are the findings for them. First, Atkinson has given that the per capita income of India is 170 rupees. Hondre has said that India's per capita income is 158. Okay. And Crozon has said that India's per capita income was 148 in the particular financial year 1948-49 prices. However, in the 1947, the per capita income had risen to 250 rupees per year according to the work of Cambridge economist Angus Madison. So you have to remember only two datas. Data of the first estimation of Dadabhai Naoroji. Okay, these two datas you have to memorize. Apart from that, this is what you have to memorize about Madison. These two data about the national income estimates, per capita estimates you have to remember. All the else is not required to be remembered. Clear? Good evening, Ashwin sir. Capital was transferred in the way that they were used to take the home charges. If you remember, we have discussed that the Britishers used to take home charges. They used to take salaries from country for the different tasks they are performing in the country. In that way, they used to take money from India to abroad. Like if I talk about their basic engineering service charges they used to take from India was 60 times more than what our Indian laborers were getting. Okay, this was to happen in that time and that's how they have taken our capital from India to abroad. Clear, Kumar sir? Next. So, India's share of global income in 1600 AD, it was 23%. Clear, it was what? It was 23%. So, by the time British left in 1947, it shrunk to only 3% that I have already told you. This is the GDPs. This is the global GDP contribution. But if I talk about global trade contribution, it used to be 33%. It again shrank to the same level of 33% in 1947. Okay, so according to former Prime Minister Mr. Manmohan Singh, at the turn of the 20th century, India was the brightest jewel in the British crown and the poorest country in the world in terms of per capita income. So for Britishers, India was the brightest jewel. They were earning a lot of money from country. They were taking lot of raw material. They were getting very cheap labors from here. So for them, it was a brightest jewel. But as an independent individual country, you can see India was the poorest country in terms of the per capita income. And this is the data which gives you the justification, but yes, India was the poorest country in terms of per capita income. So we have the duration, years, the GDP, per capita GDP and population in India. So this is from 180 to 1950 AD. This is the data of India that we have seen. But none of them you have to memorize. Okay, this is the data that has been given, but that's not important. You do not have to go with it. Clear? Next. In the British era was divided into three parts. The first part was early British period from 1680 to 1757. Then from 1757 to 1857 was the second period. And the third period was British Crown period 1858 and onwards. Okay, so the British era is divided into three phases, phase 1, phase 2 and phase 3, and the important phase we have, that's a third phase or British Crown period we can say. It began in 1857, so it period marked by colonial exploitation through the deindustrialization, agricultural commercialization, wealth drain, westernization of Indian education system. So these things happen in the country in the third phase, like where they used to do the exploitation by doing deindustrialization of the country. They have done the agriculture commercialization. Earlier, people used to produce the goods and services for their use, for their purposes. Now, the commercialization have been done by them. Wealth was drained from India to abroad, from India to Britain, I can say, and they have introduced the westernization of Indian education system. Now, why they have introduced this education system? Not to literate the Indian population, as we have discussed earlier, that only 1/6 of Indians were educated or were literate at that time, right? So they have introduced the westernization of Indian education system, but not because they wanted India to grow, they wanted the people of India to become more or to have a more better livelihood by learning certain things. No, they have introduced this so that there will be certain Indians who are not good in the English, also they will forget or they will not that much good in their Indian culture also, so that they can easily exploit them, so that they can easily rule them. That's why they have introduced this westernization. Now the British withdraw India as a destitute economy. So global GDP 1680 23%, then 3%, global export 33 to 3% it was introduced. Then zamindari, the certain system was introduced. Zamindari system, Malwari system, rotary system, these three systems was introduced by Britishers for which purpose? To take excessive land tax from the farmer. These three systems are important. One individual question can be asked from here. They can ask which of the following system was introduced by Britishers to take the excessive land tax from the farmers. So these three are the system that you have to remember. Okay. Now commercialization created a new class of intermediaries, increased the frequency of famines and reduced the farmers to the landless laborers. They have done what? They converted the farmers into landless laborers by introducing certain systems. Clear? And when the deindustrialization happened in mid 19th century, you can see it was the fall of Mughal Empire, the decline of Indian agriculture, an increase in nominal wages, a reduction in Indian textile competitiveness, and an increase in transportation facility. This is how we have faced the deindustrialization in the country. Because agriculture declined, your textile competitiveness declined. In that situation, industries were somehow was facing the loss or was at the decline level. So this is what the deindustrialization we have faced in the 19th century, because they wanted to this happen. Now, the trade policy that was unfavorable to India also contributed to the trade decline and aggravated the deindustrialization. So what we're talking about, the trade policy that was unfavorable to India, that also contributed to decline the trade of the country. Okay, and this also increased the deindustrialization in the country. So railway assisted the British in moving commodities from hinterlands to ports and vice versa. So as I have told you yesterday also, they have developed the railway not to develop Indian economy, but just to take resources from India to their country. It also enabled British investors to make attractive profits on their cash spent in railway infrastructure, building and development. So whatever they have invested there, they have earned a better investment or return on the investment, whatever they have invested on the infrastructure of railways. Now, the fundamental goal of introducing Western education to India was to generate a group of Indians who neither good in English nor in Indian culture. That's why Westernization of education system has been done. so that you will be easily exploiting the persons who belongs to this category. And if you have seen a certain movies, Hana, they have showed this kind of things in their movies, like this used to be done by the Britishers. Okay, next. Yes, Inderji sir, this is English medium batch, obviously. So now, important point is that the wealth drain. Hana, what we are talking about, the wealth drain we are talking about here. So wealth drain, I have told you, it means the wealth has been drained from India to abroad. It means from India to Britain only. The wealth drain means unilateral movement. Unilateral means one-sided movements of riches from India to Britain without a sufficient economic, commercial and material return. How it happened? It happened with the help of remittances. Remittances means transfer of fund from India to Britain. Home charges was the salary they used to take from our country. And the transfer of revenue from private businesses or investment, among the other things. So with the help of remittances, with the help of home charges, with the help of transfer of revenue, they have taken the capital of India to their country, and this is what the drain wealth is known as. So many British philosophers and Indian nationalists, including Dada Bhai Naroji, R.C. Datta, C.N. Vakil, have done research and written about the wealth drain from India to Britain. They defined that how Britishers are exploiting our country. So in 1783, Mr. Burke explained the mechanism of economic drain and rising poverty in Indian situations. In 1776, Mr. Phillips Francis studied the drain economy and classified into the 4 broad streams. Okay. So you do not have to remember the name of all. You have to remember that Dada Bhai Naroji, in his book that named as a Poverty and Un-British Rules in India, he has defined the drain wealth theory in that particular book. And what is drain wealth theory, that you have to remember. Hana, all the other names you do not have to memorize. Now, so as per Mr. Angus Madison, a certain findings we have found about the Indian economy. Like first, India's share of world economy went down from 23 to 3%. Okay. Clive took £250,000 from himself as well as Jagir worth of £27,000 a year. You can see what amount of money he have taken from India to abroad in a single year only. £27,000. Then the British salaries, that is known as home charges, were high. So Viceroy received £25,000 a year and the governor used to receive £10,000 a year. Now the starting salary of engineering services was £420 a year. That is about 60 times. How much times? 60 times the average income of Indian labor force. Now you can see how big difference it is. What Indian labor was getting in comparative to them, 60 times more money they used to take for the engineering services. And this is how they have taken the money from our country. Clear? Now, under the rule of East India Company, official transfer to UK rose gradually until they reached about £3.5 million in 1856, the year before the Minute. So this is what they have taken from our country, and that's why when they left, India became a kind of backward nation. Okay. So private remittance, if we talk about the private remittance, was also there. That was referred as the home charges. So from 1858 to 1947, the colonial government's official transfer of monies to the UK were referred to as the home charges. Whatever money we have transferred from India to UK, that has been renamed as a home charges. And these home charges includes what? The dividend to East India Company shareholders, interest on loans that raised by Government of India in England, expenditure on British Army that is stationed in India and bringing them to India, then pensions, annuities, etc. of the retired British officers, payment of guaranteed interest to the railway companies, salaries of the Secretary of State from India and his staff were included in the home charges. That was the amount they were taking as a home charges, and home charges is a part of biggest, what we can say, reason for the drained wealth from our country. Okay, this you have to remember what actually the home charges and what has been defined as a home charges. These certain examples you have to remember, that these are the expenditure which are covered under the expenditure, or I can say the home charges. Next, according to Adda by Naroji's calculation, India paid Britain 10 crore euros in house cost between 1829 to 1865. So by 1930, these residential levies were in 40 to 50 million level each year. So this is what the home charges, or I can say home costs, they used to pay to the Britishers. And that's what you can say the comparison of the macroeconomic performance of India and Britain in context to the per capita, in the population, in the GDP. You can see India's per capita income was 550 rupees and it rose to 618. But UK, you can see 974 to 6,361. This is how the per capita GDP in dollars increased in India and UK. Now the population in India 13.5 crores. That increased to 41.4 crores, and in UK it was 61.7 lakhs. It increased to 4.97 crores. Okay. Then next, the GDP in India, it was 74,250 and it increased to 2,55,852. In UK, it was 6,007 and it increased to 3,14,969. So this is what the actual macroeconomic comparison of data was between India and Britain. Clear? So let me know till now whatever we have discussed about the British era or British Crown period or the third phase of British era, is it everything clear to all of you? Is it clear to all of you? Let me know. Is there any doubt, any particular concept you want me to repeat? Or is it clear? Only remember the data which I have told you, this is important. Do not go with each and every economist's name or researcher's name or the data. Just remember what I have told you. This is also you do not have to remember. This is the comparison we have seen. What you have to remember is the percentage increase or decrease that will come forward. Clear to all? Okay, next. Now this slide is important. India's per capita income from 1600 to 1947 increased by 12%. Only how, what percent? 12%. Increase for Britain for the same period was 55%. This you have to remember. Then India's total GDP during this time increased by 2.44 times, whereas the Britain's rise 52 times. So you can see what changes have been seen or how India was exploited by the Britishers. Okay. Next, economy till 2008 and after 2008, that we are going to study here. Now we are going to talk about India's situation before 2008, after 2008. Achha, what was actually the 2008 period was? Why 2008 has been taken here as a base? Before 2008, after 2008. What happened in 2008? Per capita income means the total, or I can say the average income earned by the citizen of a country. How you calculate the per capita income? Per capita income is equals to national income divided by the total population. So you can say per capita income is the average of national income. So the per capita income is a per person income earned in a certain financial year. Clear? This is per capita income. Global financial crisis. Very good. Lehman collapse were there and you can call it a global financial crisis. This happened. So first 3 decades, India's growth rate was slow. And this slow growth rate was termed as what? Hindu rate of growth. I have already told you. Hana, and this term was coined by Professor Mr. Raj Krishna. Do remember his name. In 1978, Professor Raj Krishna, he coined the phrase Hindu rate of growth, and this Hindu rate of growth represented the slow growth of the country. Okay, this term was coined to describe the slow growth of Indian economy. And the terms refers to India's planned economy's low annual growth rate that was around 3.5% from 1950s to 1980s. Okay, so this slow annual growth of Indian economy was represented as a Hindu rate of growth. Now, the per capita income growth was only 1.3%. That was average only 1.3%. So, you can see how slow growth used to happen in the country between this period from 1950 to 1980s. Clear? Next. Now, the period of economic buoyancy and recovery during this 6th 5-year plan that started in 1980 and ended in 1985, India could break the curse of Hindu rate of growth, because from here our economy used or started growing more. So, this is what we have seen in the 6th 5-year plan. India break the curse of the Hindu rate of growth. So, higher government spending, fiscal stimulus to economy, higher economic growth have been seen. And the liberalized import policies was introduced that increased the import of capital goods and the raw material for manufacturing, boosting the production of luxurious goods in the country. Liberalized import policy means, I have told you the meaning of liberalization. What is liberalization? Liberalization simply means removing rules, restrictions. That's the liberalization. So, if you are talking about liberalized import policy, it means you made the import policy easy. Now, doing imports is easy for the country. That's why we used to import the capital goods, and that's how it helped us to produce more luxurious goods in India only. Okay, this has been done to make the situation of what? To make the situation of Hindu rate of growth go from the country. Now, from the duration 2008 to 2021, how Indian economy grew or what happened in this period. So, in 2008 growth euphoria, widespread belief that the Indian economy was decoupled from that of the developed world in the days of following the Lehman collapse. Okay, and in September 2008, India took a very uncertain step or unprecedented action. It is taken by Government of India. And that action was to mitigate the impact or effect of the global financial crisis. And to control this impact and to mitigate this effect of the global financial crisis on Indian economy, Government of India has released the 3 packages, the 3 stimulus packages that total amounted to 1.86 lakh crore, that is around the 35% of the GDP. Now, let's see what happens. And what does this mean? At the time of crisis, it's very obvious you do not have jobs. There is no per income you are earning. If you do not have job, you do not have money, you will not demand more goods and services. It means production of the country is declining. If the production is declining, your GDP is declining, your economic growth will decline, your economic development will not happen in the country. And because of crisis, people will not able to earn money, people will not able to get a job. And if they are not getting a job, their living standard will decline, their livelihood become worst. This situation can be seen in the crisis. And if people are not demanding goods and services, that is definitely going to impact the economy in form of GDP of the country. If you remember about COVID-19 situation, in April 2020, the first quarter of our lockdown, that was the April 2020, that was the first quarter of lockdown. So, what happened in that duration? We all have seen that the GDP reached to minus 23.9%. So, India's GDP contracted to minus 23.9%. And what was the reason of this? The reason for this situation was, first, if you talk about GDP, GDP has a certain formula to calculate. First of all, what is GDP? I have told you so many times, GDP is the money value of all final goods and services that is produced within the geographical boundary of a country during a financial year. So whatever you produce during the geographical boundary of a country, that's your GDP. So here the GDP is calculated with the formula that is C plus I plus G plus NX. Now what does these stands for? It is consumption. This is private investment. This is government expenditure. And that's a net exports. And how to calculate the net exports? Simply exports minus imports. This is how you can calculate the net exports. Clear? Consumption plus private investment plus government expenditure plus net exports. So in the first quarter of 2020, we have faced the negative growth of the GDP, that was minus 23.9%. So why this happened? This happened because this consumption was reduced at the time of first quarter of lockdown. Now what this consumption means? Consumption means simply the consumption that has done by the individual households, like by me, by you, whatever demand we are creating for our goods and services, that will be represented as a consumption under the GDP. And it covers around 57% part of your GDP. 27% contribution of private sector is there, around 11% contribution of government is there. This is 11, right? 11% contribution is from the government of India side. And the net exports usually stands for negative value because India imports more and exports less. So you can see when the consumption by the individual households reduced, what we have faced? We have faced the negative GDP, and that was the negative minus 23.9%. This level of contraction has been seen in the one quarter only because of the lockdown. So the same thing you can see here. If because of the global financial crisis, we can see India could have faced the negative GDP and it can be converted to the recession, and in future the recession can go to the depression, and if a country is in the depression, it means it have to start from a very base level again. Okay, that can be the scenario for the country. And how to stop to become this situation in a country? To stop this situation to become in a country, we have introduced that government will give this amount of money in the market. When this money supply will go to the market, it means people will have money, their demand will increase. When their demand will increase, you will start producing goods and services, your GDP will increase, your economic growth will increase, your employment generation will increase, your per capita income increase, your national income increase. So this was the decision of government, and not only of government, RBI also done the same thing. RBI said that we have to create a eased monetary condition. Acha, before understanding the RBI's point of view, you let me know if RBI wants that each and every person will have a sufficient amount of money, what RBI have to do for that? Hana, RBI wants like everybody will have money. For this purpose, what RBI have to do? Let me know. What should be done by RBI to make this happen? Very good. Reduce the policy rate. Hana? What RBI will do? RBI will reduce the policy rates. When RBI reduce the policy rates, loans will become cheaper. Loans will become what? Cheaper. And the people will take more loans. If the people will take more loans, they will have more money supply. They will demand more goods, and that's how the economic growth, per capita income, yes, very good. Purchasing power income will also increase. Hana, so this is what RBI also done. RBI injected 5.6 lakh crores in the money by reducing the policy rate that was roughly 9% of our GDP. To do what? To increase the liquidity in the economy. So this is how we have mitigate the effect of crisis on the Indian economy. And that was successful. You have done that. That was very successful. But this successful experiment or this successful step of the government of India have taken what? It has been done on the expense of larger fiscal deficit. So economy recovered by this investments, by this not investment, by injecting that money by the government and RBI, the economy recovered from the global financial crisis. But at what cost? At the expense of a larger fiscal deficit, which continued grow beyond the limit that was set by FRBM. Okay, so FRBM has set a certain limit, and after this, that limit was keep extending by the government of the country. Clear? Let me know till now everything is clear. Let me know is everything clear, then I will explain what is FRBM Act. Okay, clear to all. Now next. Next we have the fiscal stimulus was never phased out. Acha, we have to discuss FRBM na. 1 second. So Fiscal Responsibility and Budget Management Act. For the first time in the year 2000, Mr. Yashwant Sinha, he was the finance minister at that time, he introduced the FRBM Act. In 2003, FRBM bill was passed, and in 2004, FRBM Act became effective. Okay, so the Act was introduced in the year 2003. Act was introduced in which year? In 2003. The reason because bill was passed in 2003. It was first introduced in 2000, bill passed in 2003, and it became effective from the year 2004. So the Act was created in the year 2003, that we know. Okay, now next. Why this was introduced? So if there is, let's say for example, if there is mismatch in the revenue and expenditure of Government of India. Let's say there is a mismatch in the revenue and expenditure of Government of India. What government will do? Like the expenditure is more than revenue. Every year, the expenditure of Government of India is more than the revenue of Government of India. So what government have to do in this situation? Let me know. Answer here. If the expenditure is more than the revenue, what the government have to do to control this situation? Loss will be there, correct. Lending, government have to give loan or government have to take loan? No. Increase revenue receipts, okay. Here government have to take loan, है ना? Expenditure is more, revenue is less. It means government needs money to continue its development, to continue the social welfare, and to manage the budget and to manage the mismatch. Government have to borrow money. So here what happened? Government will borrow money. And from where government will borrow money? Government have a lot of ways. From the home, government can borrow money. From RBI, government can borrow money. From abroad, government can borrow money. Okay, from home means from the public. Government can issue government securities and take money from the public. From RBI, from the RBI, government can take loan on the bank rate as well as on the ways and means advances. And the third, from abroad, it means you can take from the international organization, you can take from other countries loan. Okay, so these are the three ways from where government borrow the money. And if government is borrowing the money, the liability on the government is increasing. The liability on the government is increasing. You have to return that money. Na? That's not a grant, that's a loan. You have to return that loan, but with the particular rate of interest. And this increase, or this represents the government of India's fiscal deficit. This situation represents the government of India's fiscal deficit. Now what is it? When the revenue is less than expenditure, this situation of government of India is known as budgetary deficit. Budgetary deficit means government's budget went to loss. That's the budgetary deficit. When government's budget went to the loss, that's known as the budgetary deficit. Clear? Now, after having budgetary deficit, government have to borrow money. So this creates the fiscal deficit. So budgetary deficit plus other borrowings, or you can call it a liabilities, because that have to be returned by the government of India. So after facing the budgetary deficit, government have to borrow the money, and that generates a lot of liability on the government. Okay, after seeing this, what happened after global financial crisis? This fiscal deficit was keep increasing, and the liability on the government was keep increasing. So we had a certain doubt that if the same situation goes on, then what can happen in that situation? Maybe we will come to the same situation where we used to be in the 1991, when we had to take loan from the IMF, and IMF have put a certain condition in front of us that if you do the economic reforms, then only we are going to give the loan. So not to go in that situation, we have introduced the FRBM Act, Fiscal Responsibility and Budget Management Act. This act has given us certain guidelines about how much fiscal deficit can be created, so that this habit of government of India taking or borrowing loan from the market and increasing the liability on the country, this should be stopped. And that's why the FRBM Act was introduced. Clear? Let me know. What is fiscal deficit, what is budgetary deficit, what is FRBM Act, and why it was introduced? Is everything clear? FRBM full form is Fiscal Responsibility and Budget Management Act. It is written in your PPT, hai na? Don't worry. This is written, Fiscal Responsibility and Budget Management Act. Okay, next, continue. So this happened, and because of this, the current account deficit increased. Because of this, what increased? The current account deficit increased. Now let's understand what is current account deficit. For that, we have to understand what is balance of payment. Achha, what is balance of payment? Let me know. I have already explained what is balance of payment. Let me know what is balance of payment. Very good. Inflow and outflow of India and other countries. Inflow and outflow between India and other countries. Hana? So we know that this circle is India. Let's say, for example, this circle is India. And India, apart from this circle, outside this circle, we have a rest of the world in the both sides. Hana? This circle is India, and the rest sides are rest of the world, Hana? In which all the countries are there. Now, India performs a certain economic transaction with the rest of the world. With every country, India performs certain economic transaction. That's a transaction related to money. Hana? Economic transaction does not mean only we are talking about export-import. Economic transaction means all the transactions related to money. So this transaction between India and other rest of the world, or I can say between India and rest of the world, this transactions record has been maintained systematically by the government, and that systematic record is known as balance of payment. So balance of payment is a systematic record of all the economic transactions between India and rest of the world in a financial year. Clear? That's the definition. Now what in this situation, you earn certain money, that's your inflow, that's your earning, and you spend certain money, that's an outflow, that's your expenditure. So this record will be maintained. And now this inflow outflow can come from any way that is related to money. It can be your investment, it can be your export, it can be your import, it can be remittances like transfer of funds, it can be grants, it can be in the form of tourism, whatever the way is from where the money comes and money goes, that will be recorded in a systematic statement that is known as balance of payment. Now this balance of payment have three types of accounting. The first we have current account, second we have capital account, and third we have financial account. Okay, these three types of account we have: current, capital and financial. I'm not going to discuss today, but this I will be discussing today. So what is current account? Current account maintains the record of exports and imports of a country. That is known as balance of trade. Whatever exports and imports happens in a country in a financial year, all that record will be maintained under the current account. And if you say that the current account is in the situation of deficit, it means current account is in the situation of loss. So this current account deficit means what? Whenever in the country imports increases in comparison to exports, this creates a current account deficit. This creates what? This creates a current account deficit. And this situation has been seen here after this situation. So when the government increased money, people started demanding goods because they got the money and you didn't have supply. So you started purchasing goods from abroad. You started increasing your imports, and because of that, what happened? Current account deficit happened. Also, you have done what? You have created a liberalized import policy that made imports very easy. And that's why the current account deficit have been seen in the economy. Clear? So the previous decade's high economic growth drove credit growth in the system as the economic productive capacity expanded dramatically. So revolutionary policies such as the GST introduced in 2017, insolvency and bankruptcy code introduced in 2016, corporate tax was done by government, demonetization was done in 2016 for 500 and 1000 rupee note. And prior to COVID-19 pandemic, the economy's average annual growth rate between 2008-9 to 19-20, it was 6.5%. That was calculated on the base year of 11-12. Okay, and 19-20, the economy expanded only by 4%. Clear? So this is the situation that we have seen in the country after the certain global financial crisis. Okay. Now, what happened after COVID-19? We are going to discuss that in the next class, that will be tomorrow. So today we are going to end here. The structural changes in Indian economy post COVID-19 we are going to discuss. Acha, how many of you agree to this statement that whatever loss Indian economy faced or whatever situation in the stagflation Indian economy came in, it is only because of COVID-19? How many of you says that this statement is true? Like it all happened because of your COVID-19. How many of you say that this is true? What is a stagflation situation? A stagflation situation means when in the country inflation is rising plus unemployment is also rising. So high inflation, high unemployment is the stagflation. This is true. COVID-19 gave a boost. True. What about rest? True. Maximum are saying true. No. Only one person have given the right answer. COVID-19 gave it a boost, but it's not totally because of the COVID-19. From 2018-19 financial year, India is in the stagflation situation, and this is the worst financial condition for any economy. So COVID-19 no doubt gives a boost to this stagflation situation, but it's not only because of COVID. It was going on before the COVID also. Clear? So, okay. So from here we are going to discuss in the next class. Now those who are watching us on YouTube, I will let you know that this is the last demo class for all of you. From tomorrow onwards, there will be no demo available. And if you want to enroll in a batch, what you have to do, first of all, download the Adda 24/7 application and go to the JAIIB October 2023 batch. You will find here the Mahapack 2.0 with the double validity and 81% discount, and the Sankalp JAIIB selection batch is also there. Now, how to enroll? Enroll by any particular product, whatever you want to enroll. The process is same. Just click on the product. Do check the offerings of the product. If you find any difficulty, you can call on this number also to get the inquiry, and then click on the buy now option. Enter a code here, that is JC80. If you enter this code JC80, you will get here 80% discount. If you want 1% additional discount, you can use the coins that is available in your application by purchasing the batch from the application only. Okay, and the code is your JC80. That's the code which you have to use here, and you will get the 81% discount, and the batch already started. As you can see, you are also seeing the demo here right now. So this will be the price with the double validity, 6 plus 6 months. Okay. Okay, Prasanna sir, I will do that. So this is all for today, everyone, and the demo sessions will not be available from tomorrow. And if you want to enroll, the process is here. And in the next class, we will be discussing about what structural changes happen in the Indian economy post COVID-19. Clear? So let's end the session here. Thank you all for joining the session, and see you tomorrow in the morning for PPB class at 7:30 AM. And in the evening, we will have Indian economy at the 7 PM same timing. Okay. So thank you for joining this session. Take care all. Bye-bye.